Hello, I'm Vern Baker, the CEO of Jaguar Mining. And Jaguar is a Brazilian-based gold mining company in the business of both producing gold and exploring and developing new opportunities for gold in the Iron Quadrangle of Brazil.
Vern, good to see you, sir. We saw you with John Hill, I think back in, would have been end of last year. And we've kind of followed the story for about the last year. So you remind people, you in 2019 brought into the company to kind of turn things around. It was in a sort of frail state, cash down to last $4 million. You've steadied the ship somewhat, and brought it into production and positive cash flow. So I'm interested in an update from where we left off last time we spoke. Okay, I think the big thing for me was the fact that you'd allocated for 2021 a 15 million exploration budget. So one would hope discoveries, increased resources and reserves would be the kind of the main focus there. So what can you tell us about the 2021, how that ended up, and how things have started in Q1 this year?
Well, 2021 ended up being a very good year for us. We made money. We certainly we've had good cash flow really for about for 2 years following the tough times of 2018 and 2019. We in the last couple of years, including last year, we've been paying dividends. We've bought back stock, and we've been investing very heavily in an exploration and development program around the 2 producing mines that we have. The year of 2021 saw us investing a lot of exploration, getting good solid, what we call feet on the ground, and initial drilling into several different prospects, and in extending the resources within the 2 mines that we have as well. Our number one project really coming out of that has been our Fina deposit, which is adjacent to our Turmalina mine, and has led us to starting a development process from our underground workings at Turmalina to access the Fina deposit. Currently in a fairly shallow range, has about over 400,000 ounces in resource, and we're currently have about a 15,000 meter drill program on that resource to bring it up to a measured and indicated level, so we can turn it into reserve, and to begin extending it to depth. It's currently, the deepest part of it is only about 400 meters down, but the bulk of it is above 300 meters, and we're going to be accessing it close to 300 meters deep. So we're pretty excited about the potential to expand that resource as well as bring it into play.
Right. Okay. But you need to do that, right? Because if we look at 2020, 91,500 ounces, 2021, 84,500 ounces. You're producing gold, you're selling gold. It's the margins that you need to, help, that need to get better. So these new discoveries and new zones are really important to you, especially the shallower stuff, because you're at depth with the others. So what do you focus on? Where does the money get spent in terms of new discoveries, exploration, etc., to kind of make sure that you can maintain the ounces that you produce, but more importantly, start improving the margins?
Well, grade is 2 things that we can do to improve margin. One is grade, and our Fina resource brings a stronger grade resource into play within a couple of years. The resource, inferred resource there is at about 7 grams, and our current resources that we're mining are more 5-gram range. So we see a significant ability to improve the grade of material delivered to the mill when we start mining Fina at Turmalina. The other way for us to improve margins is to increase outputs through the same basic infrastructure. And both of our plants, both the Caete plant and the Turmalina plant have capacity for about 35 to 50% more productive capacity available. So the exploration program is targeted at expanding that resource so that we can expand utilization of those infrastructure.
Right.
And when we run,
I was about to say, will that require additional spend at both of those facilities? In terms of driving those efficiencies, is it going to cost much more in terms of the OPEX allocated? Have you got the money left? Because you've been quite good at returning capital in the form of dividends to shareholders, and you've also been doing some share buybacks. But was that the best use of money, or should you be focused on trying to get those throughputs into the plant and get those efficiencies driven at the plant?
Well, we are very, very focused on the efficiencies of our plants. Yeah, it was a great use of the money. We have plenty of money in the bank. Quarter one of 2022, one of the toughest quarters, tougher than anything I could have expected. Coronavirus hit us. We had just some natural events, basically rain, hit us on a level that our area hasn't seen for decades. And so with a very poor quarter, because we have plenty of money in the bank, we actually slid through that in a great position, moving into this quarter much stronger. Our production levels have been working up to where we want them. And we have plenty of money being applied to exploration and development. We'll be spending over $20 million this year between the exploration and the development projects that we're working on. And really throwing more money, at some point you get to it, where throwing more money at it is not going to do anything for you, because you're limited by the quantity of good people that we have. And we've been working very hard in the last couple of years also just on building the team, and that team's ability to put drill holes in the right place, which is what's going to develop the resources from the reserves we'll produce from, and building the team that can build those projects that will bring additional tonnage into the plants. And we'll be much better off when we can run our plants at 1,500 tons a day rather than 1,200 tons a day, and even better off again when it's at 2,000. And that drives a lot of value into our margins, where we can drive our own sustaining costs down and see, we think, some very strong margins.
It's interesting to me, in this current environment, certainly for the last year, companies are blaming COVID for restrictions in terms of personnel moving in and out, rising costs, inflation is a big topic of the last 6 months or so. People are very, very nervous about whether that sustains or not. You're saying, right, okay, exceptional rain caused issues, so you could go force majeure on that one. But the access to good personnel as the kind of key driver for you in terms of improving throughput. I mean, explain how that works in a sort of real way on the ground operationally. So why does it allow you to improve, if you get better people, why does it allow you to improve the throughput? Because most people go, oh, it's just a money thing. You just increase the size of things. You replace components. You bring in all sorters.
We can always hire a company to come in and drill holes. But if you're not putting the holes in the right place, you really might as well throw the money in the air. So the key is to get geologists in that have a level of experience and knowledge, and new geologists as well. We have great access to young people here in Brazil. But the key is getting people that can understand the geology. Even people with experience don't come in and understand the geology of any given place on the day they show up. They have to walk the ground. They have to pound on those rocks. They have to get a good understanding of what they're dealing with to make good calls on what we should be doing. Over the last year, we've doubled our geologic team. We brought in some great people, and out doing the mapping, pounding on the rocks, understanding where we're going, both in the mines and on our properties that we're working from the surface down. Again, we to have success in this business, in the gold mining business, you have to find new resources. And to do that, you got to have the right people. Because we have great ground already. We're in an area that's been producing gold for well over 300 years on a steady basis. The prospects are fantastic, but you got to understand that geology to get those holes in the right place. I've been very pleased with the improvement in the team through getting people in and getting their experience in the rocks that they're working with. And we really see actually 2022 as being a great year for us exploration wise, because the investment in the team and in the work we've done will begin paying off this year, we believe, in the drill bit.
So talk to me about the historic data in terms of the company before you arrived, in terms of what was gathered, what you've been doing since to that, because obviously 2020, $3 million, last year, $15 million, and you're allocating $20 million this year. It's all good stuff. But the reserves that you got at the moment are what? They're not.
So we have reserves at the two mines of basically reserves of about 5 years of production.
Right. So
and then
it's a bit low, right? So you've got is there a, you can't accelerate it. I mean, discoveries are hard to make, and finding resource and reserves and allocating reserves, it's a difficult process. Some companies, geologists go, their whole lives were not making a discovery. So how do you ensure the chances of success for you and being able to bring that through to be able to, increase the throughput through the two facilities that you've got?
Well, the one place this company, from the largest gold companies to the smallest, generally most successful is on the mine sites that currently are actively working, as you understand the geology the best. And if you look at our initial expansions are going to come basically within the mines that we're currently operating. Fine is a deposit that literally is about 1 kilometer from the edge of our workings at Turmalina, about 1 kilometer to the edge of the deposit at Fine. We've already developed several hundred meters with that. We've gotten started for this year on going over there. So not only are we're in going to that, we're developing that new resource, or we're bringing that resource in, will be brought into reserve. But as well, on the way over there, we've already encountered several, we basically call them pods, but areas within the structure that have gold in them at levels that we believe are profitable.
Right.
So those kind of things you can do internally as well. We have a project at the Pilar mine where we're developing a limb that we've known about in the past, but the focus was driving down on the main ore bodies. We're putting work into it very high in the mine, and we're finding that we're going to be able to, we believe, to drive our production up by having a whole new zone available at very mineable depths.
Right. What do you think you need to? Do you think that's the thing to focus on for the market, right? Because it's like you've been a couple of years, steadied the ship, built up cash reserves, allocated dividends, and done share buybacks, quite meaningful levels. But the reserves and the resource just aren't there. What's the 5-year life of mine? It's kind of, if you were out trying to raise money from institutions, they'd be a little bit nervous about that. So what? I'm not saying that you do need to raise capital, but if you were, you need to kind of get to 10-year life of mine plus to be of interest to the marketplace. Is that the next thing on the list to deliver, to kind of give a surety to your institutional shareholders? I know you've got a bit of Sprott, you've got Eric's got a big chunk of this. I mean, what are they asking you to focus on?
Well, the type of ore bodies that we're mining at the two mines, really 5 years of reserve is a pretty good number, simply because they're ore bodies that go to depth, and the cost of developing resources into reserves at depth is very expensive. We really don't want to spend the money and the time and the energy it takes to develop reserves for 10 years from now, because it's a significant amount of money. And if we're developing the reserves for 10 years from now, in 4 more years, we're much closer to it. We have to spend much less money to bring those into reserves, and it's a much more straightforward process. 5 years is about right with the style of ore body. Understanding that our resource base is double to triple what the reserve base is. Right? We've identified that the resource is there, but you don't want to spend. We can spend money drilling to bring that into reserves for 10 years from now, or we can spend money in that drilling to find a completely additional reserve that can increase the production in our mine in 2 years or 4 years, which provides much more value, right? We'd much rather have maintain that 5-year profile of reserves, a 10+ year profile of resources, and be bringing that production level up, be utilizing we have two great mills, both of which are significantly underutilized. And so that focuses to how do we better utilize the infrastructure that's in place, which means we need new resource bases, and that those resources then develop their own profile of reserve for production in front of them, rather than trying to extend the current resources for a longer time period.
Okay, understood. Thanks for clearing that up. So in terms of your allocation of capital and resources, your own resources, you obviously Turmalina and Caete complex continue to be the focus. You made clear last time no M&A in the offing here. You've got enough on your plate. How do you kind of apportion those? Are they fairly equitable in terms of cash and resources in terms of this development?
Between
the two, yeah.
Well, the single largest investment we'll be doing over the next couple of years, drilling and development, is in the Fina project, because we already have that resource base and is bringing it into a productive capacity, making a reserve out of it. So of any single place we'll spend the most money, that's probably it. We're continuing to drill to both maintain the reserves and extend the resources at Pilar, as we said. And we have a whole series of targets that we're looking at on a very extensive property package. We're talking about 60,000 hectares of mineral tenements that we're working on at various levels. Some of it's pretty grassroots. Some of it, most of these properties have had gold mines on them, active gold mines. And so it's summarizing the detail, figuring out what's happening with that geology and where the most likely resource of mineable rock to make money with is next. So if you look at it, probably about half of the total spend will go to Fina. And we're currently getting towards the end of a 15,000 meter drill program. We have metallurgical testing going on, and we're driving development. About half of the rest of it is going to be devoted to actually new projects, right? Finding new resources. They could be around old mining ore bodies, but they'll be new to our package of resources. And then the other half is devoted at Pilar to both developing a new resource base in the southwest zone, as well as continuing to define reserves and resources to take the main mining ore body
right
into the future.
Okay, so that's the kind of sequence. So when can shareholders expect to see sort of big changes in terms of this cost that I referred to earlier, whether you're talking about AISC or cash costs, and what's going to be the big big moments that will start driving that down meaningfully, so that you can be, I guess, at least competitive. I get that it's throwing off cash in this quite good positive gold environment, but you've also got inflationary pressures happening here, and there's a little bit of a turbulence there.
Yeah, and our company has been turbulent in the past, right? This company has had lots of ups and downs, if you look at what we've been able to do for the last couple of years, again, we've been able to produce cash. We've gone from basically being, having no excess cash beyond our debt and our bills. We had no money. Our shareholders supported us. We got out of debt, and we've been building it. We built a nice cash basis. I mean, again, we just came through a very tough quarter with over $30 million in the bank at the end of it. We're got great financials. We are going to continue producing cash. Both mines, even with all of our struggles, actually were cash positive operations. We're reinvesting in those properties. Probably what we'll see on a big scale is Fina can start producing in a couple of years. Right? We'll have access to done enough development, done the metallurgical work. We will have to invest some money into our plant, our Turmalina plant, to handle the Fina ore. There's a lot of capacity there, but there's an awful lot of stuff you have to adjust, and it's a little bit metallurgically different. So we have to put in some processes new there. Really, probably after about 2 years from now, you should start seeing the production levels go up as we get into those higher grade ore bodies at Fina, and we should improve the margins fairly quick, both because we'll be better utilizing the capacity of the mill, producing more from the same basic plant, the same basic effort, and we'll be able to put some good, better grade material in that mill.
Okay. So if
beyond that,
okay, sorry, go on.
No. Beyond that, I mean, for a shareholder, the big thing in any gold company is the discovery of new discoveries. So there's never a guarantee that any drill hole is going to find something great. Having good geologists and drilling holes in good prospective ground, we're going to find something. Whether it's next week or in September or it's in January of 2023, I'm not sure, but we have some good people working on it. We have some great prospects that we'll put holes into. We'll be seeing something out of it.
Okay, look, I'm not here to knock anyone, because I think it's particularly tough in the last sort of past 2-3 months, broadly in the markets, not just mining but broadly in the markets. I think that the company, if the company 2 years had to go through what you've just been through, it would not have survived for sure. So stabilization is there. Tick that box, and it's really a question of what do you do to your capital to kind of continue a growth story, because your current shareholders are well, if you look at, we were at, just over $5 when we spoke in November. It's, just under $3 today because of the recent events. I'm not going to knock you on that. Everyone's in the same boat. But you've kind of got an overhang of retail in here thinking, I need to hang on to this so at least walk out with my, even, at the levels I invested in, or you've got to give them a reason to stay. And those reasons to stay have got to be strong enough. And you're suggesting that with that the next 2 years could be good enough if you make the discoveries, if you can increase the feed through the two plants, and if you can improve the grade and reduce the costs. I guess it's tough to kind of comment in the current economic environment as to whether the cost side of things can change and whether the gold price will go up, and everyone feels it should. But it's that the bit that you can control that I guess interests us in terms of the timing when you can feed that through. Do you think that's in about within 2 years?
Yeah, the next 2 years is going to be very interesting for our company. You're going to see, I believe we're going to start seeing some good paybacks from the exploration effort that we've been putting in. Literally, it's a beautiful place. I've mined in Nevada, in Canada, I've mined lots of North America. I spent a little time in South America, seen a lot of deposits, a lot of ground. We've got great ground, a great opportunity. Now, until those drill holes start coming back and saying, you've got something fantastic here, and we can put it out. it's arm waving, no matter who's doing it. But we have a great team with great ground. It's going to produce some, I believe we're going to see some really good, let's say, resource bases come out of that, of what we have there. Beyond that, we're paying for this. You know, we don't have to go to the market and ask for $10 million to do an exploration program. We've got enough in the bank, but two, we're producing the cash to do that on a regular basis. And for 2 years, we've produced the cash to do that, to do all the development we wanted to do, to build our cash balance up, and to pay back our investors. So we think that we're going to be able to continue doing that, to drive the stability in the mines that we have, to gradually grow those production bases within the two mines, and to start adding in additional resources that will grow that production profile over time. We're going to be a very strong producing and exploring company for the next couple of years. So, you know, I mean, that's why I'm buying Jaguar stock, is I think, one, I've been a gold miner for 38 years. I love the business. I love being in our mines. But also, I truly believe that in a world where there's so much question out there as to what's happening, where things are going, what we're going to do, the gold is going to be a very strong asset into the future. And I don't think there's probably a better company, a company better positioned to invest in an opportunity to be part of the future of gold than Jaguar. You know, we're that's why I'm doing it, at least.